Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 24th of September. Starting off with Amigo, where the boardroom excitement continues apace. It seems to have at least stabled the share price. We've had basically this week at or around the 50-day moving average at 10.5 pence, an uptrend line there from July at 10 pence. And so while we're above that particular area, which it looks like the stock has seen, we should have higher prices. Obviously, the initial resistance there at just over the 14 pence level would be a reasonable return in from current levels. But the hope would be that the longer the shares remain above 10 pence, the greater the chance, maybe on a 2 to 3 month view or 1 to 2 month view, we could hit the top of the range there towards 22 pence, which is the resistance line from July. I suppose if you're cautious of the shares, you might want to wait for an end of day close through the 20-day moving average, just around the 12 pence level. But it does look as though with the RSI around 50 and support or near the 50-day line, this situation is stabilizing. On to Big Dish next, which had funding news, and the share price is pushed up a little bit after having that bear trap towards 160, 1.6p earlier in the week. We had a bear trap, I suppose, below the from below 1.9 pence, and at least while we're above that, looking for a return to the top of the range around 2.5 pence. But currently 2.5p, really the big level that needs to be broken to give us reasonable upside, and obviously retest the June resistance through 3 pence. But at least a recovery situation while we hold above that 1.6 pence support line from back at the beginning of the year. Requested stock is next in the form of fusion antibodies. And here, amazing looking flag there, mid-move flag. It looks as though it's a mid-move flag, rather. We've got the stock in a range between 160 and £2. So there's a bit of an ice rink within that range. The easiest thing, I suppose, is to wait for an end-of-day close through 200 pence, which is now obviously not that far away. If we can get that, then best-case scenario target here at the moment up towards that to the top of that triangle, I suppose the trend channel really from back in April, heading for £2.80. So an end-of-day close through £2 up to £2.80. At this stage, it would be disappointing if we actually had a break back below 160, which is currently the notional stop loss on a technical basis. Next, a couple of stocks which are normally hairy even at the best of times. First is Mobile Streams, where we've had a bear trap from below 0.2 pence, so that gives us a potentially bullish setup, a bit of bullish divergence in the RSI window as well. The view is that while we're above the September 0.18 pence low, we could head up towards the main post-July resistance of 0.3 pence. We're cautious, I suppose, you'd be waiting for an end-of-day close above the 200-day moving average around 0.23 before pressing the buy button. Interesting that we have another equally difficult stock, Mobility One, following on from the last one. Here, I think it's a bit like the Amigo situation, where we had the stock being able to see the 50-day line. So we had a brief bear trap below 10 pence, but since then we've had the price action at or above the 50-day line at 11.5. While we're above that, looking for decent upside. Hopefully the best case scenario would be a move back to the top of the trend channel, which I'm trying to complete at the moment, heading towards 30 pence. But we would at least have an initial target here towards the upper teens, maybe the mid-August resistance around 17 pence, while we hold above the 50-day moving average at 11.5 pence. Onto a stock which I thought was going to disappear, and I think will do in a few days' time. But interesting to see how Modern Water managed to overshoot the runway in terms of the potential target there at around 4.5 pence. So we beat that yesterday and gapped higher since. Not much point, I suppose, projecting the shares any further, given that they are the company's being taken over. But probably at this stage, that trend line there that I've drawn is the maximum in the near term, and obviously with the time that we have left. But interesting that stock did actually push much higher than was technically suggested initially. On to one of the big movers of yesterday, Open Orphan on Human Challenge Study News. Here it looks like we've hit a resistance line there from the top of the channel from May around the 19 pence level. So looking for an end of day close above 19 in order to deliver the long awaited move to 24, which was suggested quite some time ago. Ideally, there's no end of day close back below the initial September resistance at 16.4 pence. Ahead of further attempts at moving to the upside for Open Orphan. Integument, as we saw with the modern water chart, flying at the moment. In this case, we are looking forward to see what the next target could be. At this stage, while there's no end of day close back below yesterday's high at 55 pence, we're looking for the shares to possibly hit a July resistance line projection target as high as 90 pence over the next few weeks, obviously after the dust settles. Tech Capital doing well at the moment as well, coming up with the news flow on the one hand, and also the share price stabilizing as well. We had the gap higher mid-month. We've held the gap, which is normally a plus point, and then we've had a new gap to the upside today, so that's looking very encouraging. An end-of-day close through the initial September peak, 15 pence, could at least take the shares up to 20 pence as an initial target over the next few weeks, and the big picture target here probably as high as 25, which is the top of that rising trend channel from April. Onto the stock of the week by quite a mile, which is Valerix, and every day it looks as though it can't go any higher, and obviously then it keeps going higher, so that's a nice thing to happen. At the moment, we're probably going to say, and can say, that while there's no end-of-day close back below yesterday's peak at 54 pence, the best case scenario target, revised target from yesterday at 70 pence plus could be, in fact 75 pence could be the spike high for the shares while we hold above the 54 pence level. What a fantastic rally that stock has offered. Finishing off with Wishbone Gold, which had a decent run earlier in the month and then has pulled back, but it looks like the pullback from 4.5 pence has run its course. So old resistance at around the 3 pence level from August has become new support here, and while we're above 3 pence, looking for a retest of 4.5 pence. Perhaps the best case scenario target at the moment would be a meeting with the August resistance line projection, currently heading pointing as high as 7 pence, and that would hopefully be seen by the end of next month on Wishbone. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.